Hi, this is Greg from the Trading Zone, and welcome to the weekend update. What we have here in front of us, side by side, are two charts of the Emini SP 500. On the left-hand side, we have a weekly chart, and on the right-hand side is our daily chart. The question's been coming up: well, if we are in a new bull run, where does this market have to go? Where are the next levels above us? Where is this market likely to travel to? And because we haven't been in this price range in such an awfully long time, it was necessary to go back to a longer time frame, and that's why we're looking at the weekly chart here. As we can see, we put in a real sharp V bottom back in March, April, and really we don't run into any substantial trouble until we retrace back to the top of this extremely bearish candle from October of 08, which, as you can see, brings us right up to the 1100 level. So it's a nice round number. It's just about the top of this major sell-off candle over here. And as we've seen in other time frames, this is not an unusual situation where the market retraces a large bearish or a large bullish candle. Moving over to our daily chart, we can see that the trend is holding quite nicely. We did comment last week on a couple of things. Number one, that the new highs weren't necessarily made on new strength in the momentum indicators. That continues to be true. If you look below, you can see that although volume has been increasing, we're not looking at incredibly large amounts of new volume coming into the market. It has been slowly and steadily increasing. Part of that can be due to the options expiration and rollover that we had last week. So these new highs that we've been putting in have been on somewhat lighter volume and lesser momentum. As we know, when retail traders step back into the market, sometimes that push to new highs, or an overbought market, as we say, can become even more overbought before eventually turning back down and retracing. We are still in a nice uptrend. As you can see, this is that same V bottom that we saw in our weekly chart, and that trend is still intact. With the one caveat, the one thing to mention and to take note of is this continuing decline in the DI plus on the ADX indicators, a pure measure of strength that we like to use on our longer time frame charts. So we're kind of looking at the same situation we had last week, which is market is retracing, trying to claw its way back up to 1100. We're not getting broad market confirmation on that. We're not getting the strength from the internals and the indicators that we'd like to see on new highs, and that tells us that even though we could push higher, very likely come back up here and test this 1100 area. We're not so far off, only about 25 odd 30 points. We can make that up in a couple of sessions. However, that would be the spot to really start looking for the market to retrace back and perhaps eventually come down and retest that 980 area that we talked about just a couple of weeks ago. Thanks for watching our video. Please be sure to stop by TheTradingZone.com for all your trading educational needs and live trading every day.